Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of how big companies work. And today we've got a filing that shows us TELEFLEX Incorporated is going through some pretty big changes, including a massive impairment charge that's quite a story. So what exactly is TELEFLEX telling us in this quarterly report or 10Q filing with the SEC? Well, they are sharing their financial health snapshot for the period ending the 28th of September 2025. Think of it as a company's progress report card, but with a lot more financial jargon and important numbers. Right off the bat, we see that this is a report for the last quarter ending the 28th of September 2025. This is where we get to see how the company is doing in the immediate past, and importantly, where it might be heading. Let's dive into the moneymakers, their net revenues. For the 3 months ending the 28th of September 2025, TELEFLEX reported revenues of $913 million. That's a jump from $764.4 million in the same period last year. Okay, so revenue is up, that's a good start. And looking at the longer term, the 9 months ending the 28th of September 2025, revenues were about $2.4 billion, up from $2.25 billion the previous year. So overall, the company is bringing in more money. But here is where things get interesting. The story behind those revenues. Their gross profit margin for the 3 months dropped significantly to 49.5%, down from 56.3% last year. That's a big bite out of their earnings. For the 9-month period, the margin also fell to 53.1% from 56.1%. This means that for every dollar of sales, they are keeping less money after paying for the direct costs of making their products. This is a pretty big red flag that something is impacting their profitability. Now, buckle up, because this next number is huge. TELEFLEX recorded a goodwill impairment charge of $403.9 million. What does that mean? Well, goodwill is an accounting term for the extra value a company pays for an acquisition beyond the value of its tangible assets. When a company recognizes a goodwill impairment, it means they believe that acquisition is worth a lot less now than they initially thought. This is a really significant write-down, and it is not just the goodwill. They also have significant restructuring charges, separation costs, and other impairment charges totaling $117.6 million for this past quarter. This suggests they are undergoing major internal changes, possibly shedding parts of the business or cutting costs aggressively due to poor performance in certain areas. They're selling general and administrative expenses, basically the cost to run the company beyond making the products, went up for the quarter, going from $247.3 million to $281.8 million. While revenues are up, these overhead costs are also climbing, and combined with the drop in gross profit, it's a double whammy. Research and development expenses also saw a notable increase from $38.7 million to $57.2 million for the quarter. This could be a good sign, showing the company is investing in future products, but it also adds to the cost pressures. And all these factors combined paint a pretty stark picture. For the 3 months ending the 28th of September 2025, TELEFLEX reported a net loss of $408.9 million. That's a massive loss compared to a profit of $111 million in the same period last year. For the 9 months, the net loss is also substantial at $191.3 million, a stark contrast to the $206.3 million profit they had the previous year. It looks like the second half of 2025 was particularly rough. So what's behind these numbers? A big part of the story is an acquisition. On the 30th of June 2025, TELEFLEX bought the vascular intervention business from Biotronic for about $825.2 million. They are calling this the VI business. This acquisition brought in new products like drug-coated balloons and stents, which are meant to complement their existing interventional devices. While this acquisition brought in new revenues, it also brought a lot of costs, including integration expenses and a significant chunk of goodwill. The timing of this acquisition seems to be a major factor in the large impairment charge we saw. It appears they might have overpaid, or the acquired business is not performing as expected. What's really interesting is that TELEFLEX announced in February 2025 they are splitting into 2 independent companies. One part will keep the vascular access business and the newly acquired VI business, and the other part, called NewCo, will include other businesses like urology and respiratory. They are even exploring selling NewCo. This is a huge strategic shift, and typically such moves are made when a company feels its different segments are not performing together optimally or to unlock shareholder value. It is a bold move, and the market will certainly be watching how this plays out. This strategic separation announcement in February 2025 came just before the VI business acquisition. It's possible the decision to split was influenced by challenges in integrating existing businesses, making them more open to acquiring new ones while simultaneously planning a divestiture. Digging deeper into that goodwill impairment, it seems a specifically troubled part of their business. The Interventional Urology North America Reporting Unit is where a big chunk of the problem lies. The filing explains that unfavorable changes in market conditions, like lower market multiples and higher operating costs, led to this significant write-down. They also took a $100 million impairment charge related to their Titan SGS asset group, which mainly includes intangible assets. This is linked to lower than expected sales and a slowdown in bariatric surgery procedures, partly due to the rise of new weight loss drugs. It seems they are having to evaluate the future value of some of their product lines thanks to market shifts. Looking at the company's overall liquidity, they believe they have enough cash to operate for the next 12 months, which is good. But they also took on a lot of new debt to finance that acquisition, with borrowings under their credit facilities increasing significantly. Their operating cash flow for the 9 months ended the 28th of September 2025 was much lower than the previous year, mainly due to less favorable changes in working capital and lower operating results. They are also dealing with higher tax payments. On the investing side, they spent a hefty $826.8 million in 9 months, mostly on acquiring new businesses and intangibles, which were the VI business acquisition costs. That's a big outflow of cash. Financing activities saw a lot of action too, with a significant increase in borrowings of about $1 billion. This was to help fund the acquisition, but it also means they have more debt to manage. They also spent $300 million on repurchasing their own stock, which can be a way to return value to shareholders or signal confidence in the company. Breaking down performance by region, the Americas segment showed modest revenue growth, up 7.8% for the quarter, partly thanks to the new VI business. EMEA, however, saw a huge jump of 55.9% in revenue, likely driven by the acquisition and a favorable adjustment related to an Italian payback measure. Asia also grew, but not as spectacularly. But when we look at operating profit, which is profit before interest, taxes, and other big items, EMEA's profit actually dropped by over 20% for the quarter, even with higher revenues. This suggests that integrating the new business and dealing with costs is a challenge. Asia also saw a significant drop in operating profit, down nearly 40%. An interesting side note here is their ongoing issue with an Italian payback measure. It looks like they've settled a significant amount related to past years, but they still have an $18.3 million reserved for future obligations. This is a persistent issue that impacts their finances. Alright, that is our breakdown of TELEFLEX Incorporated's latest filing. What do you think about their big strategic moves and that massive impairment charge? Will splitting the company be a success, or will it create more problems? Drop your thoughts in the comments below. If you found this analysis valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate finances. And hey, don't forget to check out our Discord community, linked in the description, for more discussions like this. Thanks for watching, and well, see you next time.